Welcome students. In today's class, we will learn about process costing. So I will take you through step by step how to do and how to solve simple to complex problems. So let's first understand what is a process. It's different from production. It's a continuous type of production where input is continuously fed to the process and it gets processed and output units are also continuously generated. So in such type of production, a different type of accounting is required. That is why we use process costing. So each process will have input and it gets processed, and to process we will utilize resources such as labor and overhead, and then there will be outputs. Classic example for process accounting is petroleum or the sugarcane industry and chemical industry, where you cannot trace the source of your material. For example, let's take sugarcane industry. You do not know which sugarcane from which farm it has come. So all this is not possible. So hence we adopt process accounting. So in process, let's understand process flow. So let's take, there is a process. Let's take petroleum industry and there will be inputs. Which are these inputs? Typically your material, labor, expenses and overheads. And you also have outputs. First type of output is from this process, the completed units, which either go to finished goods store or it will go to a next subsequent process. So those are called completed units. Then you have closing WIP and scrap. So what is scrap? Whenever there is a process, there are certain losses. So if these losses are within the normal range, they are called as normal loss, or if they are above or below, then they are called abnormal loss or abnormal gain. Also, there may be chances of closing WIP. Let's assume the process was stopped because of accounting period end, and there are some incomplete units which are not completed or not transferred to next process. So such things are called as closing work in progress. So how do we do process accounting? Let's understand. Basically, it's a T account, very easy to remember. All the inputs are recorded on the debit side and all the outputs are recorded on the credit side. There is a small difference. Let's understand with this pro forma. In addition to your regular T account, you will have additional two columns on the debit and credit side. These are to record units also. On the debit side, as we know, we have to record all the inputs. So let's take an example of a process. So what are the inputs? We already know. One is material. So material 100 kg will be recorded as to material account, and in the units column 100 kg will be recorded, and then next column value will be recorded. Apart from material, I also need labor. So this will be to labor account. Then overhead or expense to their respective account. Then I will record units as well as value. And outputs, first is the scrap. So if there is a normal loss, it would be given as a percentage of input. So if there is an input, then I will take 10%. Let's assume 10% of 100 kg is 10 kg. So by normal loss, I will also write units and value. Then if there is abnormal loss, then I will write by abnormal loss. Then comes my output, which is going to the next process. So this I will record it as by process 2. Similarly, the matching entry for this will be in the process 2 account, and that will come as to process 1 on the debit side. And if there is a closing WIP, I'll record it as by closing WIP. Similarly, after going to process 2, again I will have to incur more material or labor or overhead for that process. So I will record them in the subsequent process account. So this is how process accounting is done. Let's understand this with one example. So I have taken an example here which has two processes. Now pause the video and go through this problem statement. So I hope you have read this problem statement. What they are asking, you have to prepare process A and process B account. Also they are saying calculate the profit of process A and process B for the month of September. Let us break down one by one. Okay, this will be for 7 marks and you will approximately have about 15 minutes to solve this. So once you learn the technique and practice, the process account becomes very easy. We will see that. So Mega Limited is engaged in process engineering industry. Its product Mega passed through two process A and B during the month of September 24. The input to process A of basic raw material was 8000 units at 9 per unit. So this becomes my input, both unit and per unit value is given. So first thing what you have to do is represent a simple process flow diagram. So I have two process A and B. Then the information given is I have material of 8000 units and unit value is 9. Apart from this, so far no other information is given. So I prepared two pro forma for process A and process B. So to material 8000 units in the units column and value is 72,000. Next, they have given certain other information. So with respect to process A, let us see first. So the output unit is given as 7500. Normal loss percentage to input is 5%. Scrap value per unit is 2. Direct wages 12,000. Direct expense 6,000. Selling price per unit is 15. So we know in the pro forma on the debit side, all whatever is going into the process will come into the picture. So direct wages and direct expenses will definitely go on the debit side. So process A, I have material 8000. I will also have the normal loss, which is given 5% of input. Input is 8000. So 5% of that is 400. And scrap value per unit is rupees 2 rupees. So value of normal loss becomes 400 into 2, that is 8. Total overheads 17,400 were recovered as percentage of direct wages. Selling expenses for 5,000, they are not allocated to process. So be careful in this sentence, they are not allocated to process. So they will not come in the process account, but they will appear in the P&L account. 2/3 of the output of process A was passed on to next process and the balance was sold. So we know output unit of process A is 7500. Out of the 2/3 is passed to process A, means 5000 units goes to process from process A to process B, and 1/3, that is 2500, is sold. The entire output of process B was sold. So from process B 4800 units are coming out as a completed or finished goods. So let us represent all these data in our flow diagram. Overhead is 17,400. Now I have to apportion it in the ratio of direct wages. Direct wages is 12,000 is to 24,000. I have simplified it as 1 is to 2. So when I apply this, process A gets 5,800 and process B is apportioned with 11,600. Next, I have overhead represented for both process A and process B. Other expenses, which are labor expenses, are also recorded. Then the output is 5,000. Then if whether there is an abnormal loss or gain, we'll come to know when we prepare the process accounts and do the balancing. Similarly, process B also has a certain scrap, which is 10% of input. 10% of normal loss is 500 units and scrap value is 10 rupee. And output units are 4800. So with this, now we are in a better position to prepare the process account. Let's proceed with process account. So to material 8000 units, 72,000. Then I will record the values of labor, expenses and overhead on the both side, on the both processes. And by normal loss, I know 5%, 400 units, 800 rupees. So when there is a normal loss, I'll also open a normal loss account. So here it will come on the debit side. It will come as to process A and to process B. And I record the same value which is recorded there. Next, output from process A, which is 5000 units. I do not know the value. I have to calculate this value. So the same thing I am recording as the input to process B. So to process A 5000 units. Then by sales, I know 1/3 is sold and I do not record here 2500 into 15 rupees. The reason is that is not my cost of goods sold. That is selling price. So many students make mistake here. Here also we have to calculate the value or the cost of goods sold. So I also open P&L account. So if sale is represented here on the P&L account credit side, I will record it as buy sales at 15. Here I record selling price. Similarly, when I do the balancing, I know there is a shortage of 100 on the credit side. So this has to be abnormal loss because there is no closing WIP. Now abnormal loss account is opened similar to normal loss and I record to process A. So value whatever we calculate now, that will be coming on the debit side of abnormal loss account. So now balancing of units I am doing both side 8,000. On the debit side total is 95,800 and the same I balance it on the credit side. Now I have to calculate the cost of or unit cost of these three items which are process B, sales, abnormal loss. How do I do it? This is done using the formula process cost divided by normal output. So what is process cost? Elements which are represented on the debit side, they are your process cost, material, labor, expense, overhead. This I have to subtract with normal loss. So that comes on the numerator and normal output is 8,000 unit is my input and with normal loss I should get 95% as normal output. So that my normal output is 7,600. When I calculate this, I get cost per unit as 12.5 rupees. So this I multiply by respective units and represent the value. So now my process A is complete. The same values in other accounts wherever I have posted. So those entries I will fill now. So one is process A input, then abnormal loss value 12,250 and then to process A cost of goods sold 31,250. So now process A is completed. Let us go to process B. Process B, by sales they have told entire output 4,800 is sold. So that I represent on the credit side. Then I will tally whether I'll check there is a abnormal gain or abnormal loss. So in this case credit side is more 5,300. So that means 300 units on the debit side comes as an abnormal gain. So again I have to calculate cost per unit. So I will open abnormal gain before that and paste the matching entry by process B. So now I have to calculate cost per unit, same process cost and divided by normal output. Process cost here is represented process A input, labor, expense and overhead, and output minus normal loss is the normal output. When I calculate this, I get 21.8 per unit. I will multiply this with the respective units and I will get the values of abnormal gain and cost of goods sold of process B output. So now on the debit and credit side, they are matching. Complete the matching entries in all other accounts. The next process is to tally the processes and we have to match both the sides, debit and credit sides. So process A is already completely tallied. So there is no problem. Process B is also completely tallied. Now normal loss. So normal loss account, how to tally this? So I sell this scrap. So buy cash. So this scrap value is 5,800 rupees. Now normal loss account is tallied. Next, abnormal loss. Abnormal loss, even though there is a loss of 100 units, abnormal loss of 100 units, I still get some scrap value for that. So for process A it is 2 rupee per unit. So I get 200, I recover from this loss. The balance is going to P&L account. So by P&L balancing figure is 1,050. Now abnormal loss account is tallied. I have to paste the matching entry on the credit side of P&L account to process to abnormal loss account. So 1,050 is posted to P&L account. Now abnormal loss account is completed. Next is abnormal gain account. In the abnormal gain, typically there are losses. Whenever there is a gain, first we will recover the normal loss from that. So 300 I will recover at what? At 10 rupee per unit. So 3,000 I have recovered and balance will go to P&L. So now abnormal gain account is also tallied and I have to post this matching entry to P&L as by abnormal gain account 3540. So all other accounts are tallied. Now we are only left with P&L account. Now we have to be very careful. Is there any other expenses which are not allocated to process? So in our question there was one selling expenses, that we have to bring it here to selling expenses 5000, that we have done. And anything else? There is nothing. Both the sides they are tallying, and with the net profit of 19,100 as balancing figure. So this was how you prepare process accounts, normal loss, abnormal loss and P&L account. This problem covers everything. So you practice this problem, any processes you will be able to achieve it. If you have any questions or any comments, please post it in the comment section. If you like the video, please like and subscribe for such future videos. Thank you.